Vincenzo'S Gold Crypto Investing, and in this update we're going to get into what we were talking about yesterday, the Bitcoin halving, and we're going to show you the chart. It's had two prior halvings, three prior halvings, and the first halving that I had, remember, bell notification, comment down below, subscribe to the channel most importantly, and like it to push us through that YouTube algorithm, which I can see recently you guys have been doing it. We've been getting some more viewers, most likely to do with the fact that the price and some of the coins have been moving up. But the prior Bitcoin halvings, the first one was November 28th, 2012. The price was $12.30. The second halving was July 9th, 2016 with a $680 price. And the third halving was May 11th, 2020, and the price was $8,590. And the next halving, it is a moving date, it is not a set target, it depends on the mining and all this kind of stuff. It's scheduled for sometime in April as an estimate of 2024, and this is from Forbes. And we know Hans Gruber used Forbes, so we know this is a correct information. What we can see here through Forbes is the available supply for the Bitcoin fiat cryptocurrency rate falls under the watchful eye of the national central banks, but the total supply of Bitcoin is fixed and cannot be changed. There will only ever be 21 million Bitcoins. More than 19 million Bitcoins have already been mined, which leaves just under 2 million left to mine in the Bitcoin. For the Bitcoin, there's only 2 million coins left to mine. The Bitcoin protocol periodically reduces the number of new coins earned by miners in a process called halving. And that means that if there was each block that you saw, if you got 12 Bitcoins for one block and then they have it, now you only get 6 Bitcoins every time you solve a problem, right? And this is going to be the fourth halving. Halving is a role in controlling the supply of new Bitcoin, is one of the reasons the world's most popular cryptocurrency is seen as a store of value by some in the cryptocurrency sphere and even some in the financial institutions, right? More akin to gold than a fiat currency. I don't agree with this statement for various reasons. There is only one gold, right? And that is gold. BTC is not gold, nor will it ever be gold, right? It's just not the way it works. How do I get my little pen back up here? There it is. It's not gold, nor do I not believe it is like gold. It is this completely different speculative asset that has, to me, I know other people disagree. I believe gold is separate and all by itself because it is a precious metal and you cannot create or produce more gold. You have to mine it, right? So I believe they're two vastly different things, but they can both make you a lot of money. Bitcoin halving is when the reward of Bitcoin mining is cut in half. Takes place every 4 years. The halving policy was written into the Bitcoin mining algorithm to contract inflation by maintaining scarcity. In theory, the reduction of the pace of Bitcoin issuance means that the price will increase if the demand remains the same, which in theory that's true. At this moment, Bitcoin has an inflation rate of less than 2%, which will decrease with further halving, says David Weisberg, a CEO of trading platform CoinRouters or whatever. Bitcoin scarcity is what defines its blah, 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 blah. Rewards go down, supply constraint, says Chris Klein, Chief Operating Officer of Bitcoin IRA. Increasing demand at a time while supply is constrained has a positive impact on price, which could make Bitcoin lucrative to investors. A decentralized network verifies all Bitcoin transactions in a process called mining. They are paid 6.25 BTCs when they are first use complex math to add groups of Bitcoin blockchain as part of the proof of work. At the current Bitcoin price, 6.25 0.5 BTC is worth 193,750 for miners to keep adding blocks of block transactions running smoothly. These blocks are added roughly every 10 minutes, and the Bitcoin code dictates that the rewards miners receive will reduce by half every 210,000 blocks are created. This happens roughly every 4 years in a period that often are accompanied by heightened Bitcoin price volatility, which is very true. The first Bitcoin halving took place in November of 2012, as we talked about. The next halving was in July of 2016, and the most recent one, like we went over, was May of 2020, right? The rewards started out at 50 BTCs per block, and that's when mining was very lucrative. When Bitcoin was released in 2009, the amount dropped in half each time, and now it's at 6.25. So after the new halving, there's going to be about 3.125 BTCs for every block mined, right? So in theory, if the buyers stay the same, you would expect the price to go up. But the $1 million question is, will the buyers still be there as the same as they were back here? And you can see with the first halving, the second halving, we had a nice run up, and then we had the halving, and then the price accelerated to the upside in the first massive blow off top, and then the price had a huge consolidation right here, right? And this is where capitulation was. It's a little bit harder to see it in the monthly time frame, but we had an orderly decline and then a 50% dump right there in a matter of just a couple of weeks. And then leading up into the next halving, we had a big run up and then a consolidation and then the COVID dump and then the halving, and then the price obviously started to have an accelerated move to the upside right here. But that was, I think a lot had to do with it was the COVID money printing, right? We had excessive money printing with that halving and the price ran up. But one thing on the chart that you notice, the first halving had a huge run up, and then into the second halving, it had that COVID capitulation and then a huge run up. But notice there's one big difference in this the third run up here after the halving is we had a run up, and then we had a dump, and then we had a mountain double top, and that's different than what happened here. We didn't have a mountain double top coming off of the big bull run after the second halving or the first halving, right, leading up into the second halving. We didn't have a mountain double top. That's subtly different, and that's critical that you need to pay attention to that, because that's trying to show you something changed in this market structure, that we had a mountain double top and didn't just have a pump, a consolidation, a capitulation, and another mid-ground pump, then a capitulation and a pump. We actually had, for the first time in Bitcoin's history, we had a 50% dump followed by an equally strong rally, forming a mountain double top, and then had the big bear market, right? So as we're leading up into the next halving, you could say, look, we had this nice run up here back in 2019, a year before the halving, and we're having another similar run up right here in 2023, 1 year away from the next halving, right? So that is very similar. So we're going to have to look to see if the similarities play out, where we had a nice consolidation, and then there's probably not going to be a COVID type capitulation, because I don't think COVID's coming back. But we probably will see a consolidation back down before the next halving, and then you would expect a nice run up. And if it's like previous run ups, you would expect the Bitcoin price to somewhere get anywhere from $150,000 to $200,000 based off of what we've seen in past halvings. Where if we pull out our industry exclusive YouTube made famous measuring tool, if I can find it around here, our measuring tool, you can see after this halving, the third halving, we had a 744-ish% run up. But then if we go into the second halving, from here, we had a approximate 3,200, 3,600, about a 3,300% run up. And then after the first halving, from $12 to $600, it was much higher. So after each halving, we're roughly being cut 6, 12, 18. We're being cut a lot. We went up 3,000% in that one, and then we only went up in this most recent halving because obviously the price is higher, so it's hard to get that same percentage move. But we only went up about 700% from the bottom right? And the next halving, so say if this one continues to trend and the next one doesn't quite run you up as much, right? Because you have to have more buyers as the price is higher, as there's more coins out there. And it's a lot harder to get a 3,000% move because you'd be literally talking millions of dollars a coin, and that's probably not in the future after the next halving, right? We're going to have to wait and see, but I am not forecasting $1 million of Bitcoin. But I think it's very important to understand that there is a halving coming, and you're going to be down to 3.125 approximately BTCs per block reward instead of 6.25 that you had now from when we started at 50 back in 2009. So that's very important, and we're going to be watching to see if we do indeed have a dump leading into the next halving like we have had in multiple other ones, right? So we're going to see if we're maybe in this area right here where we had this mid-ground run-up, but this, like we've been talking about, was after a capitulation. This was an orderly decline, and then we had a 50% dump in the capitulation, right? So it's going to be very interesting to see if we see that in the Bitcoin price, and that's something that I'm watching out closely, but that's something that I feel like you need to know, that there is a halving coming in 2024, and it's going to be something that needs to be watched. And if we move this into the daily time frame, we can go and see where we're currently at in the Bitcoin price. We have been stuck in this consolidation right along the bottom part of this red trading zone, where we know when we run into it from below it, it likes to act as bearishness, right? And it likes to get rejected, and it's been getting rejected for several months since way back here in June, July, the summer months. It's been getting rejected, and when the volume comes back in, you're either going to have a pump up to the upside up to about 34,000, which is old resistance or old major support in this rising channel that we were in this bear market rally. And I'm still calling it a bear market rally because I haven't seen anything in the Bitcoin price that would signify that the bear market is over. So I think this is a bear market rally, and I still believe the Bitcoin price will eventually come down, but we're going to try on a break up to approach the $39,000 level. But as you do know, if it does break down, you're going to likely come down to some major areas of support, where your first area of support is in there at about 22,000, and then you got your major support that's sitting down here at about $19,100.77 in this blue trading zone, right? So we're going to pay close attention to this. And if we zoom out even real quick before we go look at the XRP price, I just felt like you needed to know about the halving. It's very important, bell notification. And something that we're watching is if we look at the volume, we had volume here, then it came down. This next volume in the first bull run didn't eclipse the last volume, and then the second one very, very close to the volume in the mean of the volume that you had back here into 2016. It took out the 2020, 2021 volume, and now it's starting to come down, and that's going to be very interesting over the coming year as we lead into the halving. Does the volume start to break some of these lower levels down here in the mean, and the volume actually, not the individual candlesticks, it's all about the mean. Does the mean volume start to trickle down here and get lower and start having some lower highs in the volume? And that would be something that would indicate that some of the buyers that used to be there aren't there, but that's going to be very critical to see, because the volume is coming down now, which you would expect in a bear market. You can see it steeply coming down, and if we zoom in even a little bit more, you can see over the coming next few months, unless the volume starts to, in the daily time frame, starts to level off and trickle up, if the volume keeps coming down, what you're going to have happen is the mean of the volume is going to continue to follow or closely behind it, and you don't want it to get too low in the mean of the volume, because in the next bull run you need to eclipse what happened in 2023 and what happened back here in 2021, right? You don't want to have the volume not follow the price and have that much more increase in volume. You want to sustain the same volume that you had to keep the price up, right? But that's something that we're going to look at, and something that we're going to continue to monitor as we get closer and closer to the Bitcoin halving, but that's still approximately a year away. Just like if we look at the XRP price, you can see the volume back here in 16 with its first big bull run, and then the volume declined. Second big bull run, but something that I've been talking about for a long time here is, if you look at the first volume, the second big peak in 2021, it was substantially, not substantially, but a little bit lower than the volume you had in 2016, and you had a lot more coins created. And then now in this bear market, if you take a look at what's been going on in this bear market, you can see the mean of the volume down here is much lower than it got down here during that bear market from 2018, 19, and into 2020. So that's something that we're going to watch out very, very critically. And just like I've been telling you recently, if you look at what happened with this big pump, you can see it really didn't do anything to spike up. What you would have liked to see in the weekly time frame is a big candle come up like that to match something like you had back here to show that the price didn't have to come back down. But you can still see the overall volume within the weekly time frame hasn't changed, and is in fact, even after that big volume spike and the big momentum, like I was talking about yesterday, it's not about if XRP or XLM, whoever is having the most trading doesn't equal the most bullish action. You want to have more inflows than outflows. Trading just means there's a lot of buyers and there's a lot of sellers going on, right? They're buying and selling. They're not buying and holding and keeping the inflow up. You want the inflow to go up. You don't want a lot of buying and selling, because that just means people are getting in and out. And you could have the same few big players buying and selling, buying and selling, buying and selling, and just trying to profit off of a volatile market. You want to have an inflow surplus and the outflows, or the people leaving the market, at a very, very minimum. If you have inflows way up here, right, you don't want to have outflows way up here too, and just having lots of trading. You want to have higher inflows and lower outflows and have the bigger spread there. And that means there's more people buying and holding and putting their money in XRP and keeping it in there and kind of storing it and holding it long term, versus just day-to-day swing trading and in and out of the market at random. That can be a misleading signal when you're hearing Bitcoin, which it was a big thing last week that XRP overtook Bitcoin in trading. Well, the reason that is because a lot of people that buy Bitcoin buy it and they never sell it again, right? So therefore, they're only trading one time, and then they're holding it, and that money's staying in Bitcoin. If you're trading and you just have a higher trading volume, that just means there's a lot of people buying and a lot of people selling more frequently. You could have less buyers in the market, but trading in and out more frequently, and that would make it more traded. Doesn't necessarily correlate into a higher price. And I feel like that's a very, very underlooked thing that people aren't looking at, but a very, very important thing that you must notice. And one of the things, after my rambling here, is what we're going to look at is what's been going on let's get in here, what's been going on in the 4-hour time frame. Because you can see after this huge volume spike, what we were talking about, this one big candle right here. Let's zoom in a little bit. Let's get my drawing tool back out. You can see we had that one big volume spike, essentially, like I've been saying, in a 4-hour time frame, and then it's come down. But what we were watching for is if we could have a new plateau, where the volume plateaued up here and it started a new plateau, but it hasn't. The buyers came in and now the buyers are out, and the price obviously is going to respond to that and come down. And we've been talking about why you don't buy into a big pump, because you don't want to get wrecked when the price starts to naturally consolidate. And we're looking at a 68-cent to 70-cent top part of this blue trading zone that it almost hit again here like it did there. And that's an area that you're going to want to hold to keep this bullish action going. But I think what we're in is a step down pattern, where you had your first step down, hit a moving average, had a big roll up, then another step down. And I think we're stepping down into these moving averages. And unfortunately, or fortunately, depending on what your perspective is on this, I think we're in for a healthy correction. Before we get up here, I think we're going to come and retest some of these lower lows, just because it's just what happens after you have a massive run up in the coin. And what I would be paying attention for here is as we start to come down and we start to, let's get this back to where it belongs. I think that was up here. Is the step down fashion. What takes place in the immediate term, what you need to watch out for is on a retest of this 70 cents, top part of this blue trading zone. Can you hold it and the volume comes in and you have a gigantic spike again, which would be very, very bullish and which would be very nice to see? Or as you can see, this volume has really come down and it is getting close to what it was pre-news. And that leads me to believe that then we're going to have a step down fashion and we're going to retest some of these moving averages. And then as you come down to this 58 cents or the bottom part of this blue trading zone, that's going to be sort of a game changer place. Can you get the volume to run back in and you have a huge spike? Or do the sellers really drive the market back down and retest an area that has been major upper resistance and flip it back and retest it and hold that as lower support? So those are the levels I'm going to be watching out for, the 70 cents, the 58 cents. And then if we don't hold this blue trading zone in the 200-day moving average, we could come all the way back down here to the 37 cents. Like, subscribe, and share. That's the most important thing you guys can do and help me push this through the YouTube algorithm. And I say this with much peace and love to you guys that make this channel what it is, my beautiful audience.